So we've been talking about a number of things over the last day and a half. I know we're going to talk about branded budget accommodation, discounting, profitability, all sorts of things. But I want to start first with MakeMyTrip is founded in 2000. I think that everyone here in this room in some form or fashion has put together PowerPoint presentations with visions of their company, forecasts, what things are going to look like. So we're now 15, 16 years since the founding of MakeMyTrip, the only public OTA out of India, the largest. I'd like to know what does today look like versus those first PowerPoints and forecasts that you scripted in 2000. Is it identical? Work out just the way you would expect it, or what were some of the big differences, surprises?
Yeah, no, I think it's definitely not identical. I think our initial business plan was very focused at that point of time on people coming to India, but it did have to India, from India, and within India. That's the good part. And it was called India Ahoy. So we didn't actually have the brand name MakeMyTrip when the business plan was out.
Do you still have that URL?
Absolutely. It's our inbound business. Okay. So I think some parts of it have played out a little later. We actually didn't launch in India till 2005 because Indians weren't ready to buy online. And we focused on this very small niche market of non-resident Indians in the US coming back home, which was more like a VFR, visiting friends and relatives, coming home kind of market. Very resilient, very price insensitive, very event insensitive. So through 9/11 and through SARS, people kept coming back. So which was great, that kept the fires going. But really the business took off only in 2005, which is the domestic market, and which I think flights, the air business actually surprised us pleasantly how fast it grew. It just really, because it took us by pleasant surprise, and it was because I think we fundamentally did the core thing which we should do all the time, which is we focused on the customer problem. We delivered a great solution. Customers wanted the cheap airfares. They got advertised by low-cost carriers. The traditional travel agents didn't want to sell them. They didn't make money from them. We solved that problem through technology, connectivity, and we gave a good offering, and that worked very well. On the other hand, hotels took much longer than we expected. We started trying to build out the hotel product way back in 2006, 2007. We spent a lot of time and effort and money. Philip, who's on our board since 2005, has been part of those meetings, and we said, it's going to happen now, it's going to happen now, and we tried everything.
Wait, Philip Wolf was wrong? Was he early? Is that true?
So we were just, we were actually really disappointed how long it took. So the package market took off, the air market was doing great, but the hotel market in right earnest has only really started moving over the last maybe 2 years, and the real velocity over the last year. And I think mobile has been the big reason.
But flights are still a majority of MakeMyTrip's business today, but the shift has been pretty significant.
Yeah, just to contrast it, when we IPO'd in 2010, we were 85, actually 87% air. Today, we are less than 50% air. So, and it's all moved towards the accommodation side of the business.
So let me ask you, we're just thinking about kind of that same question, a different take. What was something that, going back to founding the company, what was something that you got really wrong?
Many things.
What was the one big assumption that you made that stood out that you were wrong?
No, and when you go back in history in 2000 when we started, the immediate realization, or maybe within few months at that point in time, the big one was that we were ahead of time, because I don't think India was ready. And the fact that it's actually now, when hindsight looks very okay, but 5 years was not easy. I mean, between 2000 to 2005, we had a very small, tiny business. So I think the biggest one was the idea was great, and fundamentally it was a strong idea. It had played out very well in many countries, and there was belief and conviction that it will play out, and therefore we kind of hung around. But the learning was that we are ahead of time, and therefore we just focused on a niche market, and we did not actually pursue the India launch right after that. So we focused on inbound market, waited like 4.5 years before we launched in India. So, so maybe the learning from the whole scenario was that, next time when you want to do it, maybe you want to do a little bit more elaborate market study. Sometimes it doesn't really happen, just like that.
I know someone who can do that, by the way.
Your company.
So Deep, you'd mentioned mobile playing a big role in the interest and the growth of online hotel booking really picking up. But I think especially within the last, say, 3 to 4 years, it seems, but also in conjunction with that, we've seen kind of the China syndrome, I guess, being imported into India, where we've got very intensive discounting. It's obviously having an impact on profitability. How much of it is mobile per se, the ability to actually book on my phone, versus the fact that yourselves and GoAbibo are offering 40% off plus 100% cash back on every mobile booking, so much we can't even use all of our cash back, in fact.
Not enough.
It keeps expiring.
Yeah. Yeah, it's very hard to split it out, but I think mobile really is the strong driver. It's almost like the secular strong driver is clearly mobile. It's brought on a whole swath of people who would never be online. It tends to be younger people who don't have any other preference of where to book. This is second nature for them. They're very comfortable doing this. Last minute purchase plays a very big role in hotel. So a very significant number of bookings are done in the last 2 days, and actually significant in the last day, and a big number in the last 2 days, almost half the bookings, which again lends itself beautifully to mobile. I should add out here that a lot of Indians, a very unique Indian thing, I've asked a lot of people around the world, any other country where people actually show up at destinations and then decide their hotel, there are very few. So this is very typical to India. This used to happen. We're trying to change that. 40% of Indians actually show up. So they'll land up at Goa, or they'll land up in a mountain resort or a hill station, as we call it colloquially, and people will then shop hotels physically, maybe 3 or 4 of them, and negotiate. So all of that obviously is not the smart way of doing it, and mobile presents the perfect way, even if you're a late kind of booker, that you can research a lot when you're closer to the destination. So I think that's been the big secular trend, and it's growing and it's getting better. Actually, another aspect of it which we don't talk about much is on the hotelier side. So the hotelier side, actually, mobile is liberating, and we're talking about independent hotels out here who don't have functions of revenue management. It's one owner, operator, everything. And now it's liberating the person to be away from the hotel, wherever, and doing his other or her other business, and yet be completely connected to offers or discounts or deals. So mobile's playing actually a very interesting role out there. But then I think we can't underestimate the power of discounting. It's really, really catalyzed and accelerated the market. In fact, I oftentimes say there's only one good thing that discounting does, which is it opens up the market in a much faster fashion than it would have.
But it can't continue, forever.
It clearly can't. But like I said, from 2006, 2007, we've been trying to open up the hotel market. We never thought we'd be doing reverse economics or something like that for a bit. So it's got to be, I think, measured. It's got to be time-bound. So time-bound, I can't say, Rajesh, I can't tell you we're going to do this for 9 months or 8 months and stop. Obviously, it's game theory at play. But it's got to be measured, and even within that, you've got to have analytics at play. So I think BI is going to drive every part of the business just as it drives the revenue function. And
I think just one more thing that I would add to this, what Deep has already covered. I think the time spent on this device has helped a lot. Moved a lot of the business online, because imagine the amount of time that was spent on desktop and the time being spent on the smartphone today. It has become a preferred device. It is available with you 24/7. So clearly this is the secular fundamental driver for the growth, because it has solved for the reach. We couldn't have imagined. I remember, around the IPO time, we were 120 million internet users. And majority of them were narrowband. And broadband was not there. Just about 1% of the overall internet penetration was coming from the broadband penetration. So the bandwidth has improved. And time spent, thanks to all the social, media apps and all the overall e-commerce. So the entire ecosystem actually evolved fundamentally, as a second round of inflection, if you will, is because of the mobile. It is because of this device.
Well, Sorry, I have to ask one more question, though, about discounting. There've been three big announcements, three big funding events. So obviously, your relationship with C-Trip. There was an announcement from Go Abibo, Naspers. There's some press reporting, I think it's unconfirmed, about another big round for Oyo. From the outside looking in, it does look like, okay, you've got the three big accommodation players basically throwing down the gauntlet and saying, we're going to keep going after and funding customer acquisitions. And is that, am I misinterpreting those events?
I don't think it's a misinterpretation, and we obviously, we read the same reports. They were kind of curiously close together, and curiously amounts were very similar. So we can speak for ourselves. So we're obviously super committed, and the reason for the raise, when we had a very healthy balance sheet, we had more than 100 million plus on our balance sheet when we took money from C-Trip, was very clearly to be even more aggressive in this area. Both the other players, both Oyo and Go Abibo, I think they've, executed very fast and very well. There's no denying that. And I think everyone's playing for the big pot of gold, and clearly they want to fight too.
Well, C-Trip, they've been going through this with Chunar, and I think their response was to basically go buy Chunar and invest in Elong. Is that a harbinger of things to come in India, do you think?
Well, and maybe before that, and kind of linked point as well, the good thing about this whole capital raises that is happening is, it's just helping opening the hotel market in a big way. And I think we should see the positive aspect of that as well. The approach might not be, we can debate whether it is a right or wrong approach, going aggressive customer acquisition, whether it is through discounting or otherwise. But fundamentally, I think it's also telling us is that this is the kind of investment that was required to open up the market in terms of just moving that market from offline to online bookings and stuff like that. So I think that's very important aspect of the overall race to put things in perspective. Now, in terms of what is going to happen in future, I think, theoretically you would have many situations that could emerge. At some point in time, everyone would contemplate and conjecture that there will be some consolidation that will happen. The way we look at it is, in many ways, there may be some consolidation organically happening at this point in time. If few players are aggressive, if the other players are not so aggressive. So some part of early consolidation, in that sense is happening more organically than inorganically. And the inorganic, potential consolidation is always more not in your control, more in the control of the other side. And the overall market dynamics. So I think the way we look at it is that we are very focused on what we need to do, what is our execution strategy, and we keep doing that. And then, just make sure that keep your options open whenever the right kind of opportunities arise.
With regard to the C-Trip investment in particular, I would imagine that there were other parties potentially at the table. I'm curious why C-Trip. Obviously, you can't speak about the specifics, but what is it about C-Trip, and what does that mean for MakeMyTrip?
Yeah, no, I think we can definitely speak about why C-Trip. I mean, just independently, I think, and you alluded to that already, Doug, that C-Trip had, I guess, very successfully negotiated, navigated two torrid kind of times and come out victorious. So two battles, first Elong, and through a very, very tough and prolonged discounting war. And if that wasn't enough, and then Chunar through a very different kind of way with a different platform, open platform. And the more we spoke to them, the more we got the confidence that we will be able to get a lot of advice, a lot of wisdom from what they've seen and gone through. And I think they see this as being a necessary path of eventually getting to market dominance, market leadership in a big way. And I think no other market has witnessed these kind of price wars, good or bad. And for us, probably, that seemed to be the best fit. And it's looking good.
What about This market has had, it's been very vibrant, lots of OTAs, MakeMyTrip, Yatra, ClearTrip, and others. Why has there been no consolidation within this market? We have some of the big global OTAs that have made acquisitions or investments. We've seen this in Australia. We've seen it in Latin America, obviously in Europe and in the US. How come this hasn't happened yet in India?
Interesting question and a fair question. I guess one of the reasons could be, they were all kind of waiting for hotel market to open up, as well, because, a lot of the OTAs, some of them actually have hotel focused business pretty much. All of their business comes from the hotel business and for right reasons. I mean, it's a relatively high margin business and, much more defensible business, if you will. Like Deep mentioned earlier, when it did not open up, it was more a packages business. And not necessarily all the OTAs have actually cracked worldwide packages business as well. We decided to do that. It was a conscious choice to actually acquire customers, and we did reasonably well on that. But, given the DNA of the company, we always hoped that, we would also eventually have an online hotel business going and rocking. So I guess that could be one of the reasons. And Expedia has been actually operating in the market, for a few years now. And so I'm sure, Booking.com through, either directly or Agoda.com, etc., have been kind of, just in the market, looking at on the supply side and even on the demand side, quite a bit and all. So I can't think of any other reason for, and besides of, maybe the other reason that I can think that every, potential, let's say, global big players have also been very, very busy looking at various other markets as well. It's a question of, priority for all of them as well, looking at India market and then India market reaching a particular stage and then they get interested.
Douglas, we have a question from the floor.
Hi, Deep. This is Bikram Sohal. I have a startup called SavvyMob. We're in the last minute hotel booking space. What's your advice to startups like us, because we don't have deep pockets for discounts? So what do we do?
Yeah, no, Bikram, I think it's a fair question, and we've been there. So it's not like one can't carve out a business. I think you've got to go back to the basics, which is you're a last minute booking business. I don't think anyone's doing a good job of last minute. We launched Hotel right now, and we actually have taken it back, and we have to come back with a better way. I think you have a great niche. It's a logical need. I just shared that 50% probably of all hotel bookings are done in the last 2 days. You've got to work very hard with the ecosystem, with the hoteliers on one side, and start building your base, solving that problem in that specific problem better than anyone else. And perhaps you'd look at, Hotel Tonight as one model, and I know you do. And I see no reason why, you can't you can't spend a lot of money today on marketing dollars, but I think there are enough people out there looking for companies which have shown not just promise, but actually a good product, actually traction, decent economics, which can be made better, would be willing to fund that. But I think you have to demonstrate that first for a while and beyond a few hotels and get that traction. So it's a great space. You picked a really good space.
Before you move on, Chetan's waved me over.
How do you look at marketplaces like Paytm, considering they're also ramping up their travel product? And I guess there was an article today that they are earmarking 120 crores or something to expand the travel marketplace.
Yeah, no, it's clearly, again, a very, very good question. And, and the way we look at it, I mean, all the horizontals, it's not only Paytm, and some of the others have actually also expressed desire to get into the travel business as well. It's for them to actually speak about their strategy, frankly, but from our point of view, maybe there's another competition that will come potentially, and that's how we see them. And if that's going to be the case, and we'll be watching out for them as well. And from their point of view, core versus non-core would be the big one. And I would say if you are moving away from your core business and getting into the non-core business, do you have right to succeed or not? So, but from our point of view, we'll be watching them out. I mean, any player who wants to be in travel will be important from our standpoint.
Yeah, if I can just add to that, Chetan, I think it's a good point, but and know what Rajesh is saying, core and non-core. I also think travel is fairly unique. It has its own complexities, and it's quite different from just one more SKU. It isn't another SKU. Otherwise, we know Amazon has tried travel in the US, and they've tried Amazon Weekends, etc., etc. It's far more complex than that, and there's a reason why I think you've seen largely travel being done separately. Yes, Alibaba set up AliTrip, but then that's run as a very distinct company completely. So what Alibaba does is distinct from them with the same shareholding. I think it takes more than that. If you want to be a marketplace, sure, that could be interesting. And we do think there's space for a travel marketplace out here. We've spoken about Bonavita, which is a company where we've funded an entrepreneur who understands marketplaces from a technology point of view very well. The ex-CTO actually of Snapdeal. And we think that's going to have a great market, particularly for products where it's a pretty complex and big value or a cost chain. So we think for outbound packages, marketplace will do really well if you can cut out a couple of layers. So that's probably a place where some of these players could make a mark.
I'd like to ask you a little bit about the branded budget accommodation landscape. We just heard a little while ago from Maninder of Oyo, and acquired a lot of attention over the past year or so. And you had a relationship, as did GoAbibo, a distribution relationship until I think fairly recently. Can you tell us a bit about your decision, why to move on without them, and what you think about the future of that type of category? Is that a space that MakeMyTrip is?
Yeah. So, when we looked at Oyo in the beginning, and there are two aspects to your question. And first to talk about, Oyo business model, maybe, first, and then talk about our decision. I think we have to give them credit to solving some problem. I mean, they executed it well, and they did actually try to see that problem of solving that problem of budget chain and the quality of experience that you would get with the budget hotels differently. And they to their credit, executed it quite well as well. The question really would be now, where do they go from here? And therefore sometimes you see conflicting messages coming out, whether you want to be on the supply side or you want to be on the hotel aggregator side, kind of a thing. And I guess when we looked at it minutely, that's where we saw a little bit of a conflict of interest. So we've been aggregating hotels, and where we ended up seeing practically what was happening, which was slightly different from the stated vision, where you would be also aggregating the hotel inventory of a different kind of hotels, and we would also do that. It's not that we were going to stop at only one category of hotel. We were going to go all the way, because that has been our business model, leveraging our distribution platform and so on. That's where we thought there was a conflict of interest. There was absolutely nothing personal against, and it was not Oyo, it was actually all the other same kind of players. We thought that, it doesn't make sense. It makes sense to compete in the marketplace, but obviously doesn't make sense to give it to them our own platform to leverage.
What are your thoughts about, here we have, MakeMyTrip, public company, been in the marketplace for many years, the largest online travel agency in India, and we have a startup who has raised 100 million or more, perhaps significantly more if that last round is confirmed, with a valuation that could be approaching the market valuation of MakeMyTrip, perhaps even higher. What does that say? Is the market, is it too frothy? Who's being undervalued or overvalued?
It says it's a tough time to be public. And actually, till last year was a great time to be private. And I think all of that's changing now. So I think this year you will see a lot of rationalization. Already some big banks have written down some of their private investments in a significant manner. And I think that kind of forms now pretty much becomes the benchmark where people are already seeing their next round becoming much tougher. But, even stepping back, I think valuation is in the private space, and again, we've been there, is fairly transient, and it's very hard to say this is it, because especially when you do an internal round with the same people or the same investors investing, what is valuation, right? So it's a tough one. And we had one round like that where not everyone participated, but our Series D before IPO, we had only one investor participate. And I can tell you it was the toughest one to get the right price point for the valuation. And so if you don't get in new players, you won't get the right kind of price. But things will settle down. I think this is a year of reckoning. We've seen 2, maybe 3 such cycles now, if you consider 2001. So I think it's a year of reckoning where it's settled down. We're not too bothered about what others are valued at. We know we are undervalued, and we're focusing on getting our value back. So.
Ladies and gentlemen, Deep Kalra and Rajesh Magow.
Thank you.
Thank you.
Thank you.